Welcome to Markets Now. I'm Michelle Rook along with Craig Turner from StoneX, and we're seeing mixed trade in grains and cattle futures this morning. But Craig, let's talk about corn. It has bounced. We saw corn come well off of its lows yesterday, kind of holding support. Is the liquidation that we saw here, whether it was first notice day or whatever, end of month, is it done, do you think?
Yeah, it certainly seems like it's done. Well, I mean, that's no reason why we need to rally or we couldn't come down, a little bit more. But we had a nice sell off. It was a healthy sell off. There's a lot of profit taking going on. You have the ag forum coming up. The inflation trade was a big one. You keep on need. You need money flow to come in to keep on pushing these markets higher. So we've seen some liquidation heading into March. It hasn't been rolling into May or July as we thought it might be. The South American crop keeps on moving along, especially that second crop in Brazil. And the prospect of 93 to 94 million acres of new crop is definitely, you're hearing more about it. You didn't hear about that so much about a month or two ago, but with the ag forum at the end of the week, you are. And I think traders are right to take some profit here. I don't think I'm turning, bearish on the corn market, but it's hard to be bullish after the big run. And, they always say, a bull market needs to be fed, and we're probably not going to see catalysts for us to go higher until we can get either South American weather issues, an unexpected increase in demand, most likely exports, or we're just going to have to wait for U.S. planting season.
Yeah. And soybeans are going the opposite direction this morning. They were actually the strongest part of the grain complex yesterday, again, bouncing off, I think, that 50-day moving average. Where's the pressure coming from there this morning?
Yeah. So, I mean, here's the thing with soybeans. We have seen some spreading between beans and corn. Another thing here is, at 83 or 84 million acres from the ag farm, you get a trend line yield or close. We're still at a 400 million carryout. We haven't seen demand. And also, too, finally, I mean, I think the big driver here is nothing is getting better between the United States and China and tariffs. Soybeans certainly are sensitive to tariffs, or at least the prospect of demand. While corn is tight in the major exporters and actually kind of tight here in the United States too. Countries can still go down to South America and buy soybeans, and if we have the kind of crop they're talking about, 170 or 169, 171 out of Brazil, you're going to have 15 million more metric tons come out of South America than we did last year. So no one needs to buy it from the United States right now, or if they can wait, they can contract with South America in a couple of months. So I think, the reality there is soybeans are probably a $10 to $12 market, kind of like how they were an $8.60 to $11 market, before reason to be bullish here, as we come to the end of the month.
No doubt. South American weather has improved. And are we also seeing harvest pressure, do you think, in the bean market from South America?
Yeah, we definitely are. But, we've been talking about harvest pressure all month, just kind of, letting, whether it be on my podcast or newsletter, just saying like, hey, keep in mind, we're going to be in, harvest period. And for a while, soybeans held up, pretty well. When you take a look at a daily chart, I mean, soybeans really they haven't broken down, where,
No.
the chart got completely ugly. Now we've lost momentum in the soybean market, but we're still in this mid $10 range, give or take 30 cents either way. So, the what's interesting is, if this is the harvest pressure now, once harvest pressure ends, I mean, you got to kind of ask yourself here, I wonder if, soybeans are going to have a nice little rally, because if based on all the soybeans that were expected to come out of South America, that we should be in the thick of harvest pressure, and we really can't break down into 10 or lower, is a little encouraging, right? Especially if we're going to have 83 to 84 million acres. I mean, it remains to be seen, but if soybeans are losing acres, and this is the best the harvest pressure can do right now in South America, it's not that bad.
And what about the wheat market? Looks like we've been removing weather premium with a warm up here in some of those winter wheat production areas. Also, though, are we getting pressure here from demand, which has been lackluster, or the higher dollar?
Yeah. So, there was some real hope that we would see some increased demand in wheat in February, March, and April. The reason being the rest of the world was getting tight. The United States really is the only one that would have a big excess of demand. The problem is the dollar's been strong. And if there's any global, major commodity market that's sensitive to the dollar, it's definitely wheat on the exporter market. We haven't seen the demand come in. And there was also the inflation trade too. And we had that winter kill threat, right? So wheat ended up rallying 60, 70 cents, over the course of the past month or two, hit, resistance levels at basically the top of their trading channel and just couldn't get through. Now listen, if we start to see demand come back on the export market into the US market, I can see a rally in wheat. But if we don't get that, it's more likely that wheat is just a channeling market. And, between now and let's just say new crop harvest, it's a little bit of just a grind lower. Because, the weather is improving, that winter kill threat's probably done, getting warmer temps in the Midwest. And there's also, precipitation throughout the Midwest too.
Yeah. And you mentioned tariffs being a pressure on the soybeans, but obviously the wheat market is sensitive to that as well. And how do you see this playing out here as we go into the weekend and we look at maybe another 25% tariffs and maybe some retaliation?
Yeah, so it's a little bit different from 2018, right? 2018 was a US China type deal. This time around it's this administration, their belief is the United States is getting unfairly tariffed in one way or another, and they're going to try to make things a little bit more fair in their eyes, right? So, with the wheat market, it becomes very sensitive. What's interesting about corn is even though the price of corn now gets expensive for foreign buyers, if it's the only corn around, and they need it, they will still buy, not maybe in the same quantities, but they'll still have to come here and buy. In 2018, China didn't have to buy soybeans from the United States. They could go, and move all their purchases down to Brazil and South America. That's already happened, right? So it's not going to happen again. So, I always like to say when you get these reiterations of events, the first one is always a huge shock to the system, whether it be the first time we had the debt ceiling crisis or the first time we thought the pigs were going to crash out of the Eurozone, right? You just get these huge moves in the market. Same thing with the tariffs. But every time there was another event, another debt ceiling crisis, another country might crash out of the euro. Now we have another bout with tariffs. The market knows how to price it in. They know what to expect. And then the volatility and the fear of the unknown isn't as great. So I'm sure we'll come down. If we get these tariffs next week, I've been seeing March 1st and March 4th, depending on the news outlet. It's not bullish, but it's not going to be a bear situation like 2018 where, soybeans just go, through the floor and through the cellar.
Yeah, we've become accustomed to what happens, that's for sure. All
Mhm.
right. Thanks so much, Craig Turner, joining us with StoneX, that is Markets Now.